Before we get started, I am going to share with you a video from today's sponsor, Equitable.
How a 403(b) works is simple. It's like a 401(k) for public school employees. You put small amounts into your 403(b) plan each month. Then it grows over time, tax deferred, until you're ready to withdraw and retire. Setup is easy. You decide how much you want to put in. It gets deducted automatically from your paycheck. You can even change it anytime. Meanwhile, your 403(b) savings can grow as interest adds up and your investments potentially increase in value. When should you start? The earlier the better. But even if you start late, a 403(b) lets you play catch-up. So starting one will always be a good idea. See how a 403(b) can work for you. Contact your financial professional or visit equitable.com/teachers to learn more.
Okay, thank you, Equitable. And today we do have with us Greg Ronenberger from Equitable, and he will join Art in the conversation as we go. And he's a plethora of information, so he can certainly add to the conversation today. Now, as we begin, please remain in mute mode and use the chat room throughout the session, unless, of course, you're joining the conversation, which feel free to do at any time during our talk. You can just pop in with your questions, and we'll also be answering chat room questions throughout and at the end. And then I do want to let you know that the session is being recorded. And with that, I'll turn it over to Tony. Tony?
Hi, I want to just thank everyone, for taking the time to come, especially after a busy day. My name is Tony Cardamone. I'm the regional chair of Region 10, and I work in Baldwinsville as the director of their elementary curriculum and instruction. And as Michelle said, yes, post stuff in the chat room. Feel free to unmute throughout and ask questions. And I already see one question about, will the recording be shared after? And it will be. So it will be posted to the SANES website and on the Region 10 website portion of the SANES website. So there'll be a couple different places to find it. So this will be available for you to look at after. So no further ado, I think I will turn it over at this point to Art to, I can't say enough about the information he's going to share. And from personal experience, if you have not worked with the SANES negotiator on your contract, don't make that mistake again. Make sure you reach out to them. So Art.
Thank you, Tony. Good afternoon. How's everybody doing today? I see some very familiar faces and some not so familiar faces. So today I'm hoping to give you a little insights into what's going on. As Michelle, my Vanna White, is going to go through the PowerPoint, I can successfully say one thing. We're not going to finish it. So the good thing is we're going to hit the best parts first. Now, it's funny because in the last 2 years with the great pandemic, we haven't had a chance to really get together and do this kind of negotiations forum. So what this particular presentation is going to focus on is, how do you negotiate a contract now? And Michelle, if you go to the next slide, and a couple of things that are affecting that is, number one, you may remember that as part of the budget bill 2 years ago, which seems like 100 years ago, the property tax levy is now permanent law, which means your tax levy cannot go above 2%. This is going to cause some problems as we go through the inflationary rates, okay? And we'll talk about that a little later on as well. The next thing is a good thing the state of New York did, or not many in the last couple of years, is the Teacher Reserve Fund. And why this Teacher Retirement Reserve Fund is important is because it provides them a mechanism within the districts and BOCES to fund the increases to the pension fund that will be occurring. And we'll talk about what's going on in ERS and TRS with the reserve funds. So that's a good thing to understand too. The last one I left on the slide, just almost as if it's a giggle, the districts get into contracts with other school districts for transportation shared routes. Well, in the last 2 years, your transportation costs, generally speaking, have decreased because you were virtual for so long. So that was as well. I don't know if you paid attention, but also your substitute teachers, unless you had a lot of virtual teachers who weren't your main teachers. Michelle, if you'd go to the next slide, please. Thank you. So what happens when I want to prepare for contracts? Some of you I've worked with personally, some of you work for us at Sadie's, like Chick. What there are 4 components to getting a really good contract, I think. Preparing properly, doing the data and the research analysis, selecting a Sadie's representative if you want to help you in the negotiations. And then what we're going to talk about, the last is the most important, the common terms and contract conditions that you need in the contract. Michelle, would go to the next slide. And that's simply telling us we're going to voyage into preparing for negotiations. Now, I'm going to give you an aside for a second, okay? And this happened about a year and a half ago to me. Most of you are members of the teachers' retirement system, right? And if I had to pick a pension system in the United States that is very good, that would be number 1, the New York teachers' retirement system. So what I want to point out is your pension benefit, along with your Social Security, is typically the major bulk of your retirement, earnings. Now, you know that your pension's not taxable in the state of New York, but you probably don't know, and Greg has often spoke to this to many of the people who use Equitable, which you should, because I'm going to explain why in a second, is your Social Security is taxable at 85%. And my sister, who's a retired teacher, just called me up this weekend and was dumbfounded by the fact that her Social Security was taxed. I said, well, what do you think it was going to be? It's not a free gift from the government. Nothing from the government's free. So I'm going to give you a story of one of my best friend's father, a retired teacher from Long Island. He lived to the ripe old age of 88. His pension was $28,000 a year. Now, if you know anything about the cost of living on Long Island, $28,000 a year is probably enough to pay your school, your taxes, and maybe buy groceries once every 8 weeks. So I urge you, when you hit 45, or even actually when you start in your career, you really should get a hold of a guy like Greg and sit down and say, how do I make sure I'm not flipping those hamburgers at McDonald's? And you're often heard me tell you about that. One of my goals in negotiations is to make sure you don't. Greg's the guy in the vehicle upon which you don't have to do that, because your pension is extremely viable for the first 10 years. But every 5 years after that, it loses its economic potency, because quite honestly, you only get a cost of living adjustment on the first $18,000. And so after 15, 20 years, or in my friend's case, after 33 years and receiving a pension, it was probably 20% as viable as it was when it started. So you have to understand that. And my tip to you, if you remember one thing, is to call Equitable and go over that. Okay, preparing for negotiations. What do we do, Art? Michelle? Next slide. Okay. A common pitfall. Don't wait until the contract expires. Negotiate a year in advance. Why? Because there's less pressure, and it's easier not to have to challenge over, is the money going to be retroactive or not? So I always tell people to go early. Also, Saney's is spending a lot of time and energy and effort in digitizing its record keeping. What that means to you is we have now a database that will trigger a year before your contract expires, a note to your unit president saying, hey, your contract's expiring this year. You should really start negotiations. We're also working on regional databases of comparable terms and conditions. And we're also working on a separate cloud-based folder for each bargaining unit and their terms and conditions and how they change over time. So when you start your negotiations, one of the things you got to do is, what is the role of Saney's in the negotiations? And many of you know or don't know, you have the option to go it alone, which if you have an excellent relationship with the superintendent and the Board of Ed, that may be the way, but I wouldn't do it without a review of your contract and consultation with either a labor relations specialist, commonly referred to as a negotiator, or an attorney at SAES, or both. It's up to you. Now, one of the things you have to order, or you should ask us to order for you, is the financial data research of the district's ability to pay. Cindy Yeager does a look back in your district over 5 years and looks at the revenues and the expenses and puts together a fabulous analysis of whether your district's in good shape, poor shape, or okay shape. All right, Susan Ray, another one of our SAES negotiating team members, does a inter-district comparisons using BEDS data of districts within your region or comparable districts. Obviously, I see Mary Volkemer on the screen. City school districts like Oswego, you have Fulton County right there, I mean Fulton City, and then you have to go further out to get other comparable cities like Rome. I wouldn't compare to Utica, but Rome, maybe Homer, and things like that. I mean, Portland, rather. Again, also, and we've done this a lot, call up Equitable and ask them to come in, let them take a look at the contract. Maybe you have a really expensive disability policy or something. Maybe they could offer you an option for something better. It's well worth, the more people you involve, the more opinions you get, the better likelihood you're going to get a good understanding of how your contract works. Now, I would be remiss if I didn't mention this. I hear this consistently from my client base, i.e. you. Oh, I didn't know what that meant in the contract. Oh, I didn't know if that term really meant that. But if I asked you a term or a condition in your teacher contract, you could tell me exactly what it means, how it's been applied in the last 10 years. I urge you always to understand your contract, because that's the thing that you need to understand, because it controls your terms and conditions of employment. Now, identifying and selecting a negotiating team, very important. And I've had a lot of battles with some groups lately over who should be on the team. Typically, I do not and will not recommend a non-tenured person. I typically, if I have to pick people, I would say people that the board and the superintendent like, okay? I would also say somebody who has a vast history of the district and the collective bargaining process, because that's the institutional history that we may need. And I also suggest somebody who, for lack of a better term, loves numbers and loves to run numbers. You'll be very well served by such people. Michelle, next slide, please. Okay. As that summer, you should be identifying the bargaining unit's wishes. So you send out a survey, and guaranteed the first one is, I want a lot more money. I want to maintain my healthcare the way it is and more time off. Okay, I'm telling you, typically. I will make an observation. I generally like to try to get 5 or 6 good solid proposals, but be honest with you, in all the bargaining I'm doing now, we're almost at 10 to 12 typically. An indispensable part of the preparation is costing out your proposals. I had a client recently that asked for all these income streams and additions, enhancements, new ones, and the proposal was coming to 8 or 9%. And I had to talk them back down from that proposal, because if we go to the table with 8 or 9% a year, the district is not even going to bargain. This is going to say no. So it will actually frustrate the bargaining if your percentages are way too high. The next thing I ask you to always look at is, how is the relationship between management and labor been since the last contract? Now, I doubt there is anybody on this call who will not say that my work day is now a blur of 24/7, and I'm seemingly doing more things than I've ever done before, i.e. the work creep that we've often talked about. So you really have to see to yourself, how do we address this during collective bargaining? Another thing is, the contract review is indispensable to understand, is the contract functional in 2021, 22? Is the terms and conditions still relevant? And is there clarity in certain terms that have been at issue during the last round of bargaining? Okay, now I will tell you this. One of the most common terms I'm adding into contracts is virtual work during inclement weather, because now we can establish that you can do work from home as effectively when the kids aren't in school. So that's something to keep in mind. Okay, Michelle, next slide. So when we talk about research, actually, you can go to the next one too, please. Like I said, one research is the ability to pay. That is done by Cindy Yeager, easy enough. The next analysis is your intra-district analysis. What does that mean, Art? Well, I want to know the contracts of the superintendent and the assistant soups. I want to know what the teachers unit has received, other bargaining units. And what we look at is from those contracts, if the district is engaging what's typically called pattern bargaining, which means every bargaining unit is going to get this, every bargaining unit is going to get that, we'll have a pretty good understanding of what the terms and conditions are and what their proposals may be. Can you go to the next slide? I mean, I don't think anybody on this call would say as a final remark on intra-district, if everybody's getting 3.5% and they wanted to give you 2%, would you take that deal? No, you'd say no. That's not pattern bargaining. We're working harder and we're getting less money. That doesn't seem to be fair and under any circumstances. The next part of the research or the data is the inter-district analysis. What that means is we ask you, who does the district compare you to in terms of performance? We will also look at the beds data in terms of size, obviously budgets, and we'll put the title by title and include experience and match it up to see where you stand in relationship to these other comparable districts. Now, I don't think you would expect, and let's do an example. I don't think somebody at Janesville DeWitt would consider themselves comparable to the city of Syracuse. It's just not. Similarly, Syracuse, which were one of the big 5 school districts, couldn't compare to Oswego, which is, a small city school district. So you got to really, again, make sure your comparables are comparables, because if you ever go to mediation or fact finding, the mediator or fact finder is only going to look at districts that are comparable. And your argument at the fact finding or mediation is why they are comparable. The next thing to do as you prepare your contract proposals is formulate the priorities. Sanies will draft the proposals and cost them out. So that's all done for you if you utilize Insani services. Could you switch to the next one? Slide. Okay, this goes back to what I was talking about with Cindy Yeager, the ability to pay. The ST3 form lays out, the revenues and expenses. Now, most school districts, so you understand, will over-report their expenses and under-report their revenues by 3 to 5, 6% sometimes. So it's really important to understand that they carry over every year an unreported reserve fund, okay? State aid, absolutely important. Right now, you have 2 sources of federal funding under the pandemic relief funds that school districts got. You have to understand that that money's here today. So if you're bargaining now, you really want to make sure you obtain some of those benefits. Next, as part of the Cindy's analysis, she looks at the reserve funds. And you have an unrestricted fund balance as well as restricted fund balances. By law, you're only supposed to have 4%. A lot of districts go above that. Also, even though you have restricted fund balances, understand that a restricted fund balance can be voted into the general fund or the unrestricted fund balance simply by a vote of the Board of Education. So it's not stuck there permanently. Go to the next one, Michelle, the next slide. Okay, this is your TRS contributions over the last, 5 years. You see, it escalated to 10.62% in the fall of 17. And then all of a sudden it dropped a lot, increased, and now it's increasing again. Now, understand, these rates are set for the next school year. So the payment of this money is the year after, okay? But it shows you it's slightly increasing. And if you're a district with $100 million budget, okay, for example, I estimate approximately 68 to 70 million of that is labor salaries. So they have to contribute to some of these people, or to those people, that 10%. So 10%, or let's say this, 1% of 70 million, you know what the number is, it's 7 million. So it's a big thing to understand. Well, not 70 million, it's 700,000. So 1% can make a big difference. Can you go to the next slide? Okay, this is the one that's very important. In my time at Saney's, I mean, we survived the Great Recession of 2007, but now we're seeing something we haven't seen in my time at Saney's, and this is an inflationary rate. And this is just the last 4 months. Look at those numbers. And I will tell you, before then, the last 3 years, the highest amount was 2.18% on the consumer price index. Okay, so we've seen in the last 4 months a startling increase, and you know it's not going down, it's progressing. The first database is the consumer price index for all urban consumers. All right, this is what people commonly refer to as what it costs me for goods this year versus last year. Okay, and this is issued by the Department of Labor. Okay, U.S. Department of Labor. The Personal Consumption Expenditure Price Index. This is an entirely different index. This index is actually used by the Federal Reserve Bank to set the interest rates for banks and businesses throughout. So you can see, again, the numbers are not decreasing, they're escalating. So what does this mean to us, Art, as we negotiate? Well, if it's costing you more to live, you have to make your proposals higher because you're going to be behind the ball if you don't. But then again, you got the other problem, and what is that? The property tax cap of 2%. So these are some of the issues going on. Okay, Michelle, can you go to the next slide? Okay, the role of negotiator. Michelle, the next slide. Again, as I told you early on, Saney's can be the chief spokesman. We could be any other role you want, and that could be, we could be in a room but not talk. We can be in another room and not talk. We could be virtually but not talk. Any way you want to do, you want to define member roles. I highlighted the third one because it is very important. What I do after each bargaining is I take my negotiating notes and I upload them to your negotiations folder. We would like to also get your negotiating notes too, so we have both sets. You should also keep a binder for every round of bargaining that you go in, okay? Very important, and it happens, and I remind people all the time, confidentiality in the process. You can't be going around blabbing to people this or that happened at bargaining, and we're looking to do this, we're looking to do that. We got to keep it tight, okay? Now, we didn't really get into this yet, but I think I'll talk about it now. How many team members do we need? Well, in the last 5 years, I've had 2 groups that had even numbers. That did not work out well. I would always tell you 3, 5 if you twist my arm, but no more than 5 because it just becomes unmanageable. All right. You also want to know, how do we agree on certain things as we go along? Yes. And what I would always tell you is package bargaining is essential, which means that once we finish, for example, compensation, then we move on to healthcare. Then we move on to other terms and conditions, okay? A very important thing to know is when you bargain, make sure that the superintendent or the board or the negotiator on the other side has already gotten the authorization. I've seen this too many times where they come to the table on the other side and they don't have authorization. They're wasting your time and Saini's time, because why are we going to negotiate against ourselves? We want to know you have the authorization to get things done. And you have to ask them that. Have you spoken to the board? Have you gotten the authorization? Okay. The last thing is record keeping. Another important topic. Again, like I said, like note taking, record keeping. We're introducing a new database which will chart changes in every round of collective bargaining in your particular contract pool. So that is a neat event, introduction or addition. Michelle, if you go to 2 slides up. Okay, now this is where, if you're falling asleep already, I apologize. Now you have to pay attention, okay? All right, compensation. This is the reason why you're doing what you're doing, right? So always factor in pensionability and taxability. If it's taxable, it's probably going to be pensionable. Think of it like that. So annual increases, they're going to fight you with the TRS factor. Well, you know, TRS is going up by a point, and our mythical $100 million budget, that's 700,000. Inflation, no, the inflationary rate's going up, but we're stuck at the 2% tax levy. So I would tell you to be pushing 2% to 4%. So right now, with the inflationary rate at 4, I'd start at 4. I wouldn't go 3.5, I'd probably go 4. Also, you got the COVID-related money, right? All this federal money. You also have gotten overburdened with contract tracing and other related COVID duties, trying to get teachers to do the virtual days, you know, and things like that. And it's funny to me is in the old days, you know, 5-6 years ago, we were talking about the APPR and how administrators were running around trying to get that done. And then they introduced DASA, and you had to investigate every claim. And the funny thing here is those have now been replaced with the pandemic-related duties. The most important thing in any time you're getting new duties or responsibilities is to document the work creep, because at the bargaining table, you have to be able to articulate why you deserve a higher raise. Okay, can you go on to the next one? Now, annual salary increases are the bulk of what your compensation is. Some of you are fortunate, and it's very few, probably 10 to 15% to actually have a salary schedule, which means every year you go down a step and the schedule itself is amortized. Like I said, 10 to 15% have that. Longevity is another form of compensation that I'd say 90% of all school district administrative bargaining units have longevity. It's basically another form of a salary schedule, albeit a longer period. So you don't get it every year, you get it, you know, every 3 years, every 4 years, every 5 years. So what you do in terms of negotiating longevity is look at your contract. I was just doing a contract today out in Buffalo, and they had not changed their longevity in 17 years. Now there, the interesting problem for the employer was they are averaging an attrition rate of about 12.5 to 15% a year. So it shows they're not paying people well enough to stay. So obviously, you're looking at when was the last time longevities were done? Should we restructure the longevities? I always say everyone should get a longevity once a contract period. So if you typically have a contract period every 3 years, then try to get longevity every 3 years. You get one every 4 years, and that, okay? Well, how do you measure longevity? You could do it by years based in education, which is the most broadest and most lucrative to you. Very rare do you see that. Typically, it's in district or as an administrator in the district, okay? So these are the, if you will, the eligibility for it. Okay, next thing. Anytime you're dealing with longevity, I'm going to give you a quiz. I want somebody to shout out this answer. If I reach, the longevity says at 5 years, I get a $5,000 longevity and I receive it as a check. So I get probably $2,800. How many of you believe that's going to be pensionable? Somebody say yes or no, is that pensionable? Anybody? Are you sleeping out there? Come on. Somebody say something. Is it pensionable or not?
No.
It would probably depend. It would depend on how you wrote it.
But suppose, like I said, the facts are you just get it at one-time deal. That's it. You never get it again. It will not be pensionable. So you don't want to take non-pensionable longevity. You want to make sure it's pensionable. So Art, how do we make sure it's pensionable? There are 3 ways longevity is pensionable. Number 1, it's added to base salary. Okay, that's the easiest way. Then it compounds every year with the regular stuff. Okay, next. The next would be if it's continuous. So what does continuous means? I get it each and every year. So using our $5,000 longevity, I would ask that it would say, I get it at my 5th year completion, I get it at my 6th year, 7th year, 8th year, 9th year. And in the 10th year, then I get another $5,000. Okay, that would be continuous and cumulative. Okay, because I took my 5-year 5,000 and added to my 10-year 5,000. Follow along? That's pensionable also. But suppose the second one is 7,500, and instead of giving you 5,000 and 7,500, they only go and give you 7,500. So really, the difference is 2,500. That is continuous, but not cumulative, but it is still pensionable. So you have to understand the nuances between that. Okay. All right. The next slide, Michelle. All right. Again, when we're talking about other forms of compensation, revenue streams, remember pensionability, tenure stipends. That's another form of pensionability. Put it into your base salary. Okay, don't make it a stipend. Put it into your base. Also, very few still have it. They call it increments. So basically, what would happen is each year, to hide money, so you look like you're under the property tax cap, you get like $1,000, or let's say $1,500. Then you multiply that by your percentage each year. So that's increment plus percentage. That's sort of like a, if you will, a bastardized salary schedule. If you can try to get that as a revenue stream. Advanced degrees. Again, if you get a advanced degree for, let's say, a doctorate, it's the easiest one. Make sure it goes to base, not as a stipend, if you can. Another one is course credit, post MA plus 60. Okay. Make sure that's added to that becomes a regular part of your compensation. So let me take a step back for a second and talk about this. You have base salary. Then you have, like I said, tenure stipends, doctorate stipends, increments. You also have longevities. Those are not base salary. Unless they're specifically stated as such in the contract, but they are part of your regular compensation and are compensatory and pensionable. Now, evening and weekend supplemental pay. This is a proposal that we've been talking about and utilizing, not so much upstate, but downstate we have. And what I often do, and I've mentioned this before when I make this presentation, is I will propose a set hours for work. Once the schools negotiators see that, and after I revive them, they go, oh my God, we can't have set hours. It'll cost us too much. But my purpose in introducing it is to introduce the evening and weekend pay stipend, which we argue should be added to your base. If not, make it a stipend that's always paid. Okay. You also have things for like meal allowances. for like if you have to stay for the board meetings or something like that. Make sure that's pensionable as well. Okay, and ask for it. Okay, some of you understand. Michelle, would you go to the next slide? Okay, thank you. Mary Volkemer, since you and I have bargained together, what is my, you can unmute, tell me what is my only rule of collective bargaining? Mary, you there?
Add it to your base salary.
No, there is something. Oh, Mary jumped off. All right, she's not here right now. Okay, only one rule, write this down. It's like this in anything you do in life. Nobody wants to give you anything except the government. They want to give you tax bills. But you will never get anything you do not ask for. Okay? So I am telling you, if you don't ask for something, you're not going to get it. One of the things I actually had just settled in a college contract, which I was opposed, but the client didn't care, was merit pay. And I opposed it because merit pay is sort of like kiss me pay. Whoever gets close to the chief executive officer and they like them gets the merit pay, people don't. The next one, again, this is the most important one. And this is where Greg and his team at Equitable can help you. Negotiate in 403B plans and 457 plans. They're absolutely indispensable. They provide you income levels. I mean, look at the money you can stash away. Okay? I mean, $26,000 is not bad. If you can do that the last 10 years of your career, that's great. And I know 2 of my clients at Saney's have put it away since they started in education. They have well over $1 million in that. Okay. Now, so again, this is an area, and Greg, if you want a couple moments to speak about deferred comp.
Yeah, thanks, Art. It is one of the things that people neglect because the thought process is, well, I've got that pension, I've got Social Security, so I'll be all set. And what we see in reality is, as Art said before, for the first few years in retirement, yeah, you're probably going to be okay, but it's those later years that you really feel the pinch. So it definitely helps to get something started, and also look at the potential to have district contributions into your 403B plan as well. Look to see a small contribution from the district side, maybe a matching contribution as well. I always advocate put a little bit in there, even if it's something like $500 per member, which doesn't seem like a lot, but once you get it in there, future contracts can get increased and that number could get pretty significant. Smaller districts, it's a lot easier to get in there and get more significant amounts. So definitely a good tool to get you some extra compensation without it really showing up as a compensation line.
And just to piggyback on what Greg said, I have been putting a employer contribution in probably about 20 to 25% of my contracts now, because it will give you that little extra cushion in retirement. Michelle, next slide. All right, annual leave buybacks. You see this a lot, and typically I find that people want the vacation, or it's typically vacation leave, though you can see it in sick sometimes. You may have what we call an attendance stipend. So if you don't take any sick time, you get $1,000 and things like that. Vacation leave or these buybacks are good, but they're also not good in one way. Now, I know a lot of administrators are 2 paychecks from financial disaster. Again, use Greg's group because you don't want to be that person. But so they utilize this vacation buyback, for example, to go on the summer vacations and stuff like that. I have done this. Remember, if I can get an employer to contribute money into their account, I've even done it where the vacation buyback money goes in as a non-taxable event into a 403B. You know, so you avoid the income taxes on it and it goes into your account. And that way you're not getting taxed. But I understand the dynamic of younger members of the bargaining unit needing the cash and wanting the cash. So I just offer that as a suggestion, as other forms of income. All right, let's go to healthcare, because this is the battleground right now. Next slide. Okay. I am telling you, I litigate retirement healthcare. Oh, I don't know, 4 or 5 times a year in various school districts around the state. Okay. The key to good contracts is clear healthcare retirement benefits. The language is very important. And this is where, for example, you may be totally uncomfortable representing yourself at the bargaining table. You must explain, what the plan is. What's the contribution rate? Is the rate going to be fixed at the time of retirement? What are your co-pays? Do you get Medicare reimbursement, which is a huge litigation issue right now? You need to spell it out. And remember, the most important thing is say it's for life. It's not going to end at some point. Active insurance is same kind of concepts on clarity of language, okay? The funny thing that you may not have known is just in December during the pandemic time period, just right before it, the Cadillac tax was repealed by the federal government. So that no longer provides a stress level for employers to make sure that the plans are under the excess tax. So that's been tossed out. Okay, let's go to the next slide, because I know we only have a few more minutes and I want to make sure I get through healthcare, please. Okay. The indemnity plans are not even a metal plan, okay? The indemnity plans are basically this kind of insurance that you can go anywhere at any time and receive any benefit for whatever your co-pays, out-of-pockets, and deductibles are. So it's pretty, you don't see many of them. I think we're down to less than 50 statewide. PPOs are pretty much the mainstream, but they're starting to fade away into HMOs or EPOs. And I would tell you, try to preserve your plan every time you're in bargaining, because if they change plans, the employer is going to give you an inferior plan that's going to cost you more. All right. And those types of plans hide into platinum, gold, silver, and bronze. Obviously, platinum being the most beneficial. Okay. Next, in the contract, try to set forth what the deductibles are and out-of-pocket expenses. Lock it in. So if the employer tries to change the plan benefit levels, they can't, because you have a contractual right to what they are. Now, in the old days, you used to see mostly flat dollar amounts. Now you don't see flat dollar amounts; you see percentage. And as I was going to say with hold on one sec. I apologize for those technical difficulties. So lock in your percentage. Obviously, in your area, I gotta believe the percentage is roughly on average about 5%. Okay, so that's one thing I would tell you, that 15% is probably the going rate where you are, but try to keep the percentage down. Don't jump up 5% the contract. Go up a couple percent. Always make sure too you go up your unit's the last one to go up. Don't let management tell you, well, you're the leaders, you have to lead. No, we're the leaders who work really hard. We're the ones who should be taking care of the most. All right. Okay, Michelle, the next slide. Drug plans. All right. Drug costs are the largest cost in the health insurance plan. All right. The average person over 50 takes 6 drugs. So it's really, you can understand where the cost comes in. In the contract, you want to spell out the copays, the number of tiers, and if you have a mail order, what is the mail order? Michelle, you want to go to the next slide? All right, high deductible plans where you can have a health savings account. All right, avoid high deductible plans. I mean, if you're 25 or or 30, a high deductible plan is great because you're not sick. But if you have a family or you're over 50, high deductible plans, you're going to run through the money. Now people go, but I have a health savings account with that. Yeah, but the health savings account is a gimmick for you to go to the high deductible plan. So they're going to give you some money in there, but it's never going to cover your costs. So I would tell you to be very careful. I avoid high deductible plans, and I only think you see them in about, I don't know. I think I've only seen them in about 25 to 50 districts statewide. So I would avoid them. Okay, high deductible plans. Let's go to the next slide. All right, this relates to the publications regarding what contributes or what is considered contributions for qualified mental expenses that you can use your health savings account for. Michelle, the next slide. It's more explanation of these high deductible plans. Again, like I told you, I'm not a big fan of them. Michelle, would you go to the next slide? Every contract you have, and the district should provide a flexible spending plan, okay? This is money that can be used for unreimbursed medical expenses, okay? It's typically a use it or lose it. It could be also used for childcare or adult care if they live in your same house. So this is something that you definitely want to get in your contract, okay? And again, what's good about this is it's a pre-tax vehicle so that you reduce your adjusted gross income. If you use your 403B and put money in, that's also reducing your adjusted gross income. The more and more money you can put into these types of vehicles, the less income tax consequence you have right now. There's also other things called, Michelle, if you go to the next couple slides, go through them quick. Health reimbursement arrangements, HRAs, same kind of things, but they're normally associated, Michelle, next slide, with high deductible plans. Okay. Would you go to the next slide? And if you could get to the one that says cafeteria plans, that'll be the next one we can get to. All right. Okay. Now this plan is slightly different. This plan provides you with the ability to pay for your healthcare premiums, pre-tax dollars too. So if you're contributing to 15% in the Region 10 area, you'd like to contribute that pre-tax. So again, it will reduce your adjusted gross income. It also provides for other benefits, so like life insurance and things like that. So if you can get a 125 plan into your account, that would be a very good thing. Now, if you go to the next plan. Now, I know that Equitable does certain insurance products too. Obviously, what you may not know is a benefit that pays $50,000, that income to the beneficiaries is not reported as income. Over 50,000 is. Now, the thing is, however, if you pay for the premium cost of that plan, okay, and some of you may get that notice on your tax form at the end of the year, which says insurance, a couple $100 or whatever it is you taxed on it. And everybody says, well, why am I getting taxed? You want to be taxed on the premium because if you have a life insurance policy that pays $200,000 and you're taxed on a premium, the amount over the $50,000 is not going to be taxable. If you're not taxed on the premium, then the benefit will be taxable. There's another type of insurance that's sort of like an investment vehicle too. It's called a split dollar. You don't see much of this anymore. It's basically the employer would contribute a certain amount in theory until the premium pays for itself. That didn't work out too well because we had in the 2003, 4, and 5 an inflationary period that blew that up. But infrequently you see the split dollar. Disability policies, if the districts offer them, great. That's another benefit you may want to put into your contract. Michelle, we go to the next slide. Saney's dues. Okay. A few of you have this benefit. And it says that the district shall pay for one national and one statewide organization. I would tell you to submit that Saney's is a statewide organization in New York. It provides professional services. It's actually chartered by the state of New York Education Department. Most people don't realize that. So if you can get them to pay your Saney's dues, it's a non-taxable fringe benefit. It's great. It's like health insurance. You're not taxed on health insurance, okay? Now, I will tell you, the argument you're going to encounter is the opposition by districts. Why are we going to pay Saney's to sue us if we have, if we pay their dues? So a lot of times you find that problem. So that's why I would propose more general language. Another big thing, especially if you have younger people, is a tuition reimbursement benefit. All right. A lot of times, I just finished a contract today that had a service requirement afterwards, which meant that you had to report to work for that district for 3 years after you obtained your doctorate. Just something to know. Okay. I have about 5 minutes. I'm going to go real quick. Michelle, next slide.
Yep. All right, we'll want to leave some time for Q&A too.
Okay, but maybe, well, I'll tell you what. I will tell you the rest of the terms are pretty explanatory. One final note on APPR is we believe all indicators from the federal and state government, I talked to Cindy Gallagher about this earlier this week, is APPR is still going to be out there this year. So that the state is desperately trying to get the feds to alleviate the assessment requirement, but they're not going to budge on it now. So I'll turn it over for final comments from Greg first, and then we'll do a couple minutes because I unfortunately have to go to another meeting right after this one. I apologize for that.
Well, thanks.
Okay.
Just quickly, if you're not sure how to best utilize us in the negotiation process, just give me a call, reach out. We'll have a quick 10-minute conversation, see where we could help out. But we'll leave time more for the questions here.
All right, any questions? If not, we could give Art a few more minutes, but.
I have one question. Arthur?
Is that Brent?
No, this is Chick.
Oh, Chick. Okay. I couldn't tell.
Did I misunderstand you at the very beginning? You were talking about your sister and Social Security. Did you say that Social Security taxes are taken out of TRS pension benefits?
No, I just said that your Social Security benefits taxable at 85% of your benefits taxable income.
Oh, okay. All right. I misunderstood you then. All right. Thanks.
Yep. Nope. Good point to clarify. Anybody else?
Okay, well, we have about 5 more minutes.
I did share out the PowerPoint just now. So for everyone who's attended tonight, your copy of the PowerPoint was sent right to your email, so you can look that over too.
Yeah, and for anybody, if you have a question, you're a little embarrassed off-site, you can certainly call the office tomorrow and you can talk to me about the thing that's on your mind about it. I mean, I didn't get into a lot of the other critical terms that you want to wrest power away from the management side, like with management rights clauses. You want to avoid them. You want to avoid zipper clauses and things like that. Grievance procedures, you want to make sure you get binding arbitration. And you know what's interesting to me is every year now, Saney's is organizing probably, I don't know, 4 or 5 new bargaining units, which is kind of hard to believe that there are that many new bargaining units or people still out there unorganized, but there are. So it's always good to make sure that you keep in place binding arb. Because if you don't get in the first contract, it's hard to get it after that. Okay. Anybody else have any other questions? Michelle, what do you think?
Okay, well, so of course you can follow up with the Saney's legal department and you can follow up with Greg, and you'll find all the Equitable contact information also on the Saney's website.